Hey, happy QE3 day, everybody. The only good news I can share with you from my world today is that we won't have to speculate on QE3 anymore. It's over, it's done, it's announced. 40 billion additional dollars every month with no end in sight. That's on top of the 45 billion already flowing in, so $85 billion every single calendar month to prop things up. Yay, Ben. So anyway, it wasn't a great day for me, as you might guess, but it wasn't horrible either because, as I've been very clear about, I've had the vast majority of my portfolio in cash because I really was concerned about something just like this happening. Before I get into a charts, and this will be relatively quick, there were a couple of popular items on Social Trade that I wanted to remind you of. One of them was one a little creation of mine last night. And, let me just preface here by saying that the past 3.5 years of unrelenting bull market have certainly brought its share of, the bear market's just around the corner. And, our friends in Gainesville and the perpetually promised Wave 3 is kind of the most comic version of that. And I've certainly had my fair share of, you just wait till da-da-da-da-da. But the one thing I will say about the QE3 is that this is not opinion, this is fact. If you look at the succession of the effect of the QEs, it is diminishing. It's not opinion. So as I drew last night, QE1, QE2, Operation Twist Extension, they're getting smaller and smaller. And so today begins a new spurt for QE3, another color, and it will remain to be seen just how high it pushes things. My friend Serge in Paris also augmented that, and I even think he used the same colors here, with this little illustration showing that not only is the price diminishing, but the longevity is shrinking as well. So I'm going to give that one a spectacular because I love that little item. And if you're not a Social Trade, my gosh, what are you doing with your life? So enough of that. Thank you, Social Trade. Back to the charts. So gold kooks, you continue to just rock the world. As we zoom in here, after the breakout we saw back on the 31st of August, it's just been clear sailing. There was that weird, brief dip. In fact, when I saw this happen, I thought that the Federal Reserve had accidentally, I'm quite serious about this, I thought they'd accidentally done the release early, that it had slipped out somehow. Because, I don't know where that move came from, but it plunged, and then once the release was out, which is this bar, it just roared higher. Same can be said for silver, of course, in an even larger way, 4.3% in a single day. So, we're still way beneath the lifetime highs on these things. Silver was like $50 an ounce or something at one point. But clearly, silver and gold doing very, very strong. My poor old analog here for the miners really may have taken its last beating at this point, because this line was really my last line in the sand. We are doing something that never happened with the prior incident, which is we are penetrating back into this large range defined by these two lines. In fact, just to make this a little more legitimate, I'm going to make this even worse because I'm going to widen this range. I try to give it the benefit of the doubt with that gap, but I'm going to widen the range here a bit more so you can see quite plainly how wretched a violation this is. So I probably won't be quite as chatty about the bearish configuration of miners because the pattern's really harmed. If we completely stall out in reverse, sure, we can talk about it some more, but the analog is damaged and nothing's going to undo that. This is really echoed by the XAU. We're above the horizontal line and the descending trend line. So definite harm. Now, as far as the ES and the NQ, the ES has had a cleaner breakout pattern, and it really showed today. I'm recording this a little after the close, so don't be fooled by the 0.25 gain there. It was very substantial, like 18 points or so. You could see here, I'll just back this up to a couple of days, we were just really biding time. And then once the announcement hit, it was off to the races. A huge move here of about, what is this, nearly 30 points or so. Very large move on the ES, and naturally the NQ as well benefited majorly from the plowing of more fiat money into the economy. I say economy, use that loosely, into the primary bankers. And so there you go. Looking at a few big indexes, we can also see the benefit that been conferred upon them, some of which have also damaged whatever's left of the bear case even farther. Indu up over 200 points for the first time, incredibly, since 1998, above this channel. Transports still, on a broad scale, weaker than the Indu, but all the same, challenging its descending trend line. Nasdaq Composite, a little more cleanly configured to the upside here. 1.33% breakout to a high not seen since the internet bubble. Russell 2000, not only pushing above this descending trend line, but threatening quite severely the lifetime, never before seen high represented by the horizontal line. So it's just boggles the mind. I mean, ladies and gentlemen, the financial crisis never happened. And the S&P, even this wedge pattern that I've drawn, has been bested. I'll get rid of this line here. So we are above this wedge as well, suggesting that really any little weakness should be bought. And the VIX, no shock here either, down to 14.05. We are getting to the lowest depth seen in years and years and years. Just to keep adding to the bullish fire, the Kiwi has broken above its own symmetric triangle pattern quite cleanly. And the Euro is not quite there, but boy, it had a pretty good day, but it needs a little more, has a little more to prove. There's this modest topping pattern here that was pretty important, especially when it broke down back early in May, but we have come full circle. So just jawboning by Europe has done a good job of completely erasing all that sort of summer crisis. As far as bonds, kind of a woolly day there. It was interesting because the interest rate had been soaring and then it actually closed down 0.5%. And if you look at the ZB, on the one hand, it still could puncture through this horizontal level, which would bring, I think, to use the term that existed, an avalanche of selling. On the other hand, I was a little surprised how this reversed really hard. We had this plunge earlier, and then it basically fought its way back to almost to where it began. So Treasuries still look vulnerable, but for whatever reason, a very hefty fight back. But broadly speaking here, that fight back is no different than this one right here. That is a series of lower lows and lower highs. So this is the key. If it breaks this one, the post I did earlier today about the gigantic collapse could well come true. So as for myself, not a good day, but aided only by a very large amount of cash on the sidelines. I am, to say I'm lightly committed is an understatement. I'm like 77% in cash, 23% in my surviving short positions, which number 39. I had a bright spot or two. One was JCPenney, which I covered. But on the whole, the day fairly well stunk, and really the only thing that made it, not horrible was that it was just completely watered down with cash that doesn't move. So anyway, that is it from me, and let's see how long the juice from QE3 lasts. But you know what? At least we don't have to guess anymore. It's here, and it's here to stay. Bye-bye.